Why do the rich seem to pay fewer taxes than the rest of us? And more importantly, how can you use the same strategies they do to minimize your tax burden? Taxes are one of the most significant obstacles to building wealth, especially for business owners and investors. But understanding how taxes work and knowing the right legal entities to use can drastically change your financial future. At The Passive Path, we're focused on providing you with actionable insights into financial management, investment, and wealth building. Taxes don't have to drain your wealth. With the right knowledge and tools, you can keep more of your money while legally minimizing your tax liability. There's a concept that can help you understand how your financial decisions affect your taxes and wealth building. It's called the cash flow quadrant. In the quadrant, there are 4 categories: employee, small business owner, big business owner, and investor. Each quadrant has a different tax rate and a different approach to wealth building. On the left side, you have employees and small business owners. Employees typically face the highest tax rates, paying around 40% of their income in taxes. On the right side, big business owners and investors pay far lower tax rates. Big business owners pay around 20% in taxes, while investors can often pay close to 0. You need to understand these differences because they will determine how much of your wealth is eaten up by taxes. Employees pay higher taxes because they don't have the ability to deduct expenses that business owners do. As an employee, your income is taxed first and foremost. You don't have the option to legally shield your money through entities like corporations or LLCs. Small business owners face a similar situation. They often pay a higher tax rate too because they don't structure their business in a way that minimizes taxes. Many small business owners don't take advantage of the benefits that come with forming a corporation or LLC. This is where having the right education and advisors can make a massive difference. You can't just assume that the way you've always done things is the best way. Understanding how taxes work for different entities can drastically reduce your tax burden. Let me know when you're ready for the next part. One of the most powerful tools for reducing taxes is choosing the right legal entity. An LLC, corporation, or S-Corp can provide you with a range of tax benefits that you can't get as an individual or sole proprietor. Different entities work best for different purposes. For example, if you're in real estate, you may want to set up a separate entity to protect your properties. Real estate investing comes with risks, and having a dedicated entity can protect your personal assets. On the business side, corporations can offer tax deductions that are unavailable to individuals. By using the right entity, you can write off expenses and pay less in taxes. The key is understanding which entity works best for your goals and how to use it properly. The more you learn about entities, the better equipped you'll be to legally minimize your tax liability. The government provides several incentives for business owners and real estate investors. These incentives can reduce your tax burden significantly if you know how to take advantage of them. For instance, if you invest in real estate, you can benefit from tax deductions for depreciation, property management, and more. Real estate continues to be one of the best ways to reduce taxes, but it's not the only option. Businesses that invest in things like renewable energy, electric vehicles, or charging stations can earn tax credits. These are just a few examples of the kinds of tax incentives available to investors and business owners. The government wants you to invest in certain areas and is willing to reward you with tax breaks to encourage that behavior. Whether it's real estate, business investment, or other opportunities, Knowing what incentives exist is critical to reducing your tax liability. In today's society, lawsuits are a real threat to anyone who owns assets. Whether it's a business, real estate, or even personal savings, you need to protect your wealth from litigation. A simple way to do that is by setting up an LLC or corporation. These legal entities shield your personal assets from being targeted in lawsuits. For example, if you own a business and it gets sued, your personal assets, like your house or car, are typically safe if they are in a separate entity. Insurance is your first line of defense, but entities like LLCs and corporations offer a second layer of protection. Many people don't realize the risk they're taking by not having the right legal structure in place. If you don't set up a proper entity, a lawsuit could put everything you own in jeopardy. Protecting yourself from lawsuits is just as important as protecting yourself from taxes. When it comes to minimizing taxes and protecting your assets, working with the right advisors is crucial. You can't do it all on your own, especially as your financial situation becomes more complex. A qualified accountant and a good attorney are essential for creating a strategy that works for you. They'll help you understand the different tax benefits available to your business and personal assets. But not all advisors are the same. You need advisors who know how to work together, accountants and lawyers who communicate with each other to ensure your strategy is solid. Having the right team of professionals can save you a lot of money and prevent costly mistakes. The more qualified your advisors are, the better your chances of legally reducing your tax burden. The key to building wealth and minimizing taxes is to move from the left side of the cash flow quadrant to the right side. If you're an employee or small business owner, you're on the left side where taxes are higher. The goal is to move to the right side, where big business owners and investors pay much lower taxes. Big business owners pay around 20% in taxes, and investors often pay little to nothing in taxes. To make that shift, you need to get educated and start taking action. It's not enough to just know the theory, you need to implement the strategies. Understanding how taxes work on the right side of the quadrant is critical to your success. If you want to build wealth and reduce your tax burden, you must move from the E and S side to the B and I side. One common mistake is buying assets just to avoid taxes. People often buy real estate or luxury items because they think it will help them reduce their taxes. But that's not the right approach. Buying something you don't need simply to avoid taxes can actually cost you more in the long run. For example, if you buy a car or a piece of real estate just for tax purposes, you may end up spending more money than you save. Instead of focusing on tax avoidance, focus on the investment itself. Look at the return on investment, the value of the asset, and how it fits into your overall strategy. Only after you've made a sound investment decision should you consider the tax benefits. Never buy an asset purely to lower your tax bill. It's not a smart financial move. Now that you understand the basics, it's time to take action. Here are practical steps you can start taking today to legally reduce your taxes and protect your wealth. First, educate yourself. The more you know about taxes, legal entities, and incentives, the better equipped you'll be to make smart financial decisions. Next, set up the right entity for your business or investments. An LLC or corporation can help protect your assets and lower your tax liability. Then, work with qualified advisors. An experienced accountant and attorney can guide you in structuring your business and investments in the most tax-efficient way. Finally, take advantage of tax incentives. Whether it's investing in real estate, renewable energy, or other business opportunities, There are plenty of incentives available that can help reduce your taxes. Start applying these strategies today, and you'll be well on your way to legally minimizing your taxes while building wealth. Building wealth and minimizing taxes isn't as complicated as it seems, but it requires the right knowledge and the right strategies. By understanding how taxes work, using the right legal entities, and working with the right advisors, you can keep more of your hard-earned money and protect your assets. I hope you found today's video helpful in your financial journey. If you did, make sure to hit that like button, subscribe to The Passive Path, and leave a comment below with your thoughts or questions. Also, share this video with someone you care about. Help them get started on the path to financial freedom, too. Best of luck with your wealth-building journey. Feel free to watch more videos on the channel for more actionable insights, and I'll see you in the next video. Take care. Is this conversation helpful so far?